Hello and welcome to this very special interview here on Money Paathshaala. Joining me today is Aditi Nayar, who is a veteran economist. She's been tracking India's economy for close to 2 decades. She is the chief economist and head of research and outreach at ICRA, someone who is deeply admired for her commentary on the economy. Thanks very much, Aditi. The economy has been in focus, is in focus. I'm looking forward to this conversation with you after quite a while, actually, and I do hope we speak more often because people would love to hear how you simplify, the economy for the common person. So my first question to you, how is the economy currently looking to you? Because the stock market commentators seem to believe that things are very, very good there on the economic front. But what is your own view and what kind of growth are you penciling in for FY24?
Thanks a lot, Vivek, for a very generous introduction. And, just to get into the first question that you asked, the stock market and economists like myself are not always on the same page. So, I might end up painting at the best of times, I'll probably paint a more cautious picture. And I think that's going to be the case today as well. So I am cautiously optimistic. I think India is well placed in the global scenario. We are looking at growth being close to the highest amongst the large economies for India in FY24 as well. However, we are looking at growth slowing down from last year to this year. And there are a few reasons for that. One is the base effect, which is going away. The second is we've had a lot of monetary tightening, and that is likely to have at least some impact as far as the growth momentum is concerned. And the third is that the global economy isn't really supportive of exports growth from India. And we've seen several months of merchandise exports contracting. We're also now seeing a steep slowdown in the pace of growth of services exports, although here we still remain cautiously optimistic that we're not going to get into a contraction mode, but certainly there's a lot of wait and watch that we need to really be quite cognizant of the fact that services exports cannot continue to grow in isolation of what's happening in the rest of the world. And of course, we have this big question on the monsoons, El Nino, and climate events in general. I mean, we've had this strange start to the monsoon season. We've had a delayed onset, we've had a slow progress, and then a very fast catch up because of excessive rainfall over short periods of time. So while if we look at the monsoon numbers today, they're going to look normal, it's actually masking or camouflaging a lot of unevenness which has happened in the past 6 to 7 weeks. And, that is really something that doesn't bode very well for agricultural outcomes anyways. And we have this vector of a potential El Nino hanging above our heads, which is definitely adding to more volatility. So agriculture, definitely huge amount of wait and watch. Manufacturing, from the point of view of commodity prices, definitely being a lot lower than the kind of peaks that we saw last year. We're hopeful that that's going to make margins better and help to boost volumes as well when prices are not going up very regularly from the manufacturing space. Services, I should stay, my view on services is that a lot of households will continue to prioritize services consumption, which is something that was not possible during the lockdown. But in many cases, the pent-up demand component is now off the table. So it's still a prioritization. I'd rather have an experience than buy something, but that doesn't mean that there's a huge amount of pent-up demand which continues. So very mixed outlook for the Indian economy. But overall, I would still categorize myself as cautiously optimistic, maybe not as optimistic as the FIIs that have pumped in a huge amount of money in the last 4 months, or the stock markets in general, but definitely I would call myself cautiously optimistic.